Hello everyone, welcome to Brilliant Bankers. Today we'll be starting with Unit 3 of Bank Financial Management, the subject in CAIB. The unit will be regarding correspondent banking and NRI accounts. We have already completed exchange rate and forex business, and the second unit, liberalized remittance scheme and other remittances. To start off, what is correspondent banking? The term correspondent bank refers to a financial institution which provides free services across the globe to the banks who have presence in their host countries. Correspondent banks act as facilitators or agents, or rather intermediaries, in facilitating a host of business relationships for the bank in the host country, generally by routing wire transfers, conducting business transactions, gathering documents on behalf of the bank in the host country, etc. And in all forms act as a representative bank in that country, thereby helping the customers in handling transactions that originate in those countries or get completed in those countries. To tell an example of a correspondent bank, you know that SBI don't have branches in all countries. State Bank of India doesn't have a branch in each and every country. Let's take an example of USA. State Bank wants to send some money to a importer in US. How will he be sending it? He will be in a tie-up with the bank in US. For example, the Citibank. So Citibank is the correspondent bank of State Bank of India. Citibank is a correspondent bank of State Bank of India in the United States of America. Coming to the chapter, banks also get access to the foreign markets and serve those international clients through correspondent banks without having to open their own branches abroad. This is what I said. So in this condition, the Citibank is a correspondent bank of State Bank of India. Correspondent banking, in its true sense, is a relationship between two banks which have mutual accounts with each other, or one of them have account with the other. However, in a larger sense, correspondent banking also means a relationship and servicing of banks' needs as agents without having account relationship. This is due to large number of banks offering correspondent banking services, and it was not possible to have and maintain accounts with large number of them. But the growing needs of the international business required support and services from the large number of banks across the globe. The main reason for not opening branches in other countries involves high costs and volumes to service the branch. Further, it was not possible for all international banks to obtain permission for opening the branches in several countries due to restricted foreign bank or branch licensing policies adopted by some banks. Coming to the need for correspondent banking, again, this is it. It was not possible for all international banks to obtain permission for opening of branches in several countries due to restricted foreign bank or branch licensing policies adopted by some countries. It also involves high costs and volumes to service the branches. With correspondent banking, a bank is able to handle business in another country or city through local banks there, and the local banks act as an agent for the former and charges fees for the services rendered by them. So correspondent banking facility is essential for providing banking services in foreign countries where the respondent bank does not have any physical presence. Bank use the correspondent bank services to explore opportunities with the overseas clients abroad and also retain their international clients while keeping the cost down in maintaining such a relationship. How do they keep it down? With the help of a correspondent bank. Without opening their own branches. So this is how they keep it down. Coming to the functions of a correspondent bank. A correspondent bank handles different type of services. First will be the account services like clearing house services, the collection of import or export bills by giving payment instructions, by overdraft and loan facility, and also investment services. There are few more. To explain you a bit in all these headings, clearinghouse services. The bank offers services related to handling of outward payments, receipt of inward payments, and collections through the account maintained with it. The account is also used for reimbursement of the letter of credit claims, check collections, drafts of check issued on the account. The service includes providing of statements of account at predefined intervals, as also advices and details of transactions which are handled through the account. Coming to the collection of import and export bills, they also credit the proceeds of such collections after realization to the account maintained with them. Besides, this service may also include follow-up for payments, reminders, noting and protesting of bill of exchange, as also may include follow-up for payments, reminders, noting, and taking steps to safeguard the interest of the respondent bank. What are the facilities provided in overdraft and loan facility? The correspondent by bank having an account of the client bank also grants overdrafts for temporary needs in order to fill up a short-term funding gap. It also considers granting of loans on regular short-term basis based on the credit assessment of the foreign bank. However, these arrangements require execution of agreements and documents between the client bank and the correspondent bank, subject to bank's internal approvals and the regulatory permissions if there are any. Investment services are offers related to investment of overnight surplus balances in the account beyond a minimum balance to be maintained at the domestic call rate minus a small margin. It offers investment of funds in short-term deposits and cash management services for the client bank groups. The other services that are provided are like letter of credit advising, the same confirming of the letter of credit, arranging buyer's credit and supplier's credit for importers in the respondent's bank's country, bankers acceptance, issuance of guarantees, both in bid bond and performance guarantees, foreign exchange services, which includes the derivative products, custodial services, trade referral and credit reports on foreign parties, other fundraising services like bonds, the ADRs, GDRs, etc. Coming to the different type of accounts, the foreign currency accounts maintained by a bank with another bank are classified as three. It is a nostro account, vostro, and a loro account. So, what is a nostro account? It means our account with you. For example, we had an example earlier. SBI having an account with the Citibank of USA in New York. So SBI is having their account in a branch in New York. So that is a nostro account for the state bank. Vice versa. If Citibank is having an account in a Mumbai branch of State Bank of India, it is a vostro account for them. So State Bank having their account in a branch in New York is a nostro account, and the same bank of New York having their account in a branch in Mumbai is a vostro account for them. So what is a loro account? In this case, we take the example of a third bank. Let's take the example of American Express. Here, the State Bank will be referring to the American Express, the Citibank account that it's hold in New York, their account with them. I think it's clear. What is a mirror account? While a bank maintains nostro account with a foreign bank, it also has to keep an account of the same in its own books for the purpose of reconciliation. This is more or less a reflection or a shadow of the nostro account, just a copybook of the nostro account. The only thing is that this is maintained in two different currencies, in the foreign currency and also in the regional or local currency, so that it will be easier for reconciliation. Coming to the next slide. What are the modes of transmission? The different modes of transmission are: what is transmission? The different modes of sending money. For example, how do you send money in India? We send it by the mode of RTGS and NEFT. What is RTGS? It is real time gross settlement. And what is NEFT? Hold. NEFT is National Electronic Fund Transfer System. So what is the difference between RTGS and NEFT? RTGS is a gross transfer system and NEFT is a netting system. So what is gross and what is netting? In a gross transaction, if a bank, if there is a transfer from State Bank to the Canara Bank, for example, the transfer is a fund of 5 lakh rupees. The whole amount is being sent from State Bank to Canara Bank. Coming to the condition of the NEFT. In this case, there are two transactions from State Bank to Canara Bank amounting to 3 lakh and the 2 lakh. So the total amount is 5 lakh. And vice versa, from Canara Bank to State Bank, there is a transaction of 1 lakh. So what happens? Only 4 lakh is being sent from State Bank to Canara Bank, where all the transactions are clear automatically. This is called netting. Now let's discuss all the different modes of transaction in detail. SWIFT, the abbreviation for which is Society for Worldwide Interbank Telecommunication. It is a global member-owned cooperative society and the world's leading provider of secure financial messaging services. It is owned by member banks and financial institutions, providing secure telecommunication and a one-point contact with more than 11,000 financial institutions, which is spread over 200 countries. It works in a 24-hour basis, 24/7, 365 days. The system is a cost effective with cost of average message being grossly lower. Swift is driven and defined by its vision, mission, and three core values: excellence, community, and innovation. Coming to the second type, which is CHIPS, Clearing House Interbank Payment System. This is a major payment system in the United States of America and it's operating since 1970. It is a fully automated computer-based messaging and net payment system. Now you may be getting the word net payment system, which was explained earlier in the case of RTGS and NEFT of India. Net settlement payment system used by major banks for settlement of large part of US dollar payments in US. CHIPS was established by the New York Clearing House as a substitute to paper checks. Over the period, CHIPS has grown both in volumes and growth in number of banks, with a membership of 49 banks on date. Let's come to FedWire. This is another US payment system operated by Federal Reserve Bank. It's operated all over the US states since 1918 and handles a majority of domestic payments. It is an automated computer-based messaging and payment system working on gross settlement basis. All US banks maintain accounts with Federal Reserve Bank and are allotted an ABA number to identify the senders and receivers of payments. So CHIPS was working in a netting system. Fedwire works in a gross settlement system. You do have two systems in US. One is CHIPS, one is Fedwire. What is SWIFT? SWIFT is a worldwide interbank telecommunication network. So CHIPS and Fedwire is from the US. Coming to the CHAPS, this belongs to the British people. So CHAPS is Clearing House Automated Payment System. This is a British equivalent of the CHIPS, handling receipts and payments in London. This system works on the same principle of CHIPS. What was it? It was netting. Working on the net payment settlement system, CHAPS is used by large number of banks in the UK, with about 20 member banks and over 4,500 indirect members using the system through some large banks. Coming to target, the Trans-European Automated Gross Settlement Express System. Trans-European Automated Gross Settlement Express System. So CHAPS, already we have spoke about it. That's a netting system. Now coming to target, this is a gross settlement system. Lately, the system that is being used is target 2. That use of target 2 is mandatory for the settlement of any euro transactions involving the euro system. The euro system consists of European Central Bank and the national central banks of the European Union member countries that are part of the eurozone. Participation in target 2 is mandatory for new members who are joining the eurozone. This facilitates receipts and payments of funds across the entire eurozone. What is the eurozone? The whole of Europe. So target is totally used on gross settlement system, something like that of an RTGS. What is this RTGS plus? This is also another euro clearing system, but this is a German clearing hybrid clearing system. This is a German hybrid clearing system and operating as a European oriented RTGS system. RTGS Plus has over 90 participants. The Euro 1, with a membership of 53 shareholder banks in all EU member countries, works as a netting system with focus on cross-border euro payments. For retail payments, EBA has another system called Step 1 with around 200 members. On daily basis, Step 1 processes on average close to 20,000 transactions for a total value of more than 1 billion euro. So this is what is RTGS Plus. I don't think that I have to explain RTGS in India and NEFT India more. RTGS is a real-time gross settlement system, works 24/7. It is managed by IDBRD, Hyderabad, and the head office of RTGS is in Hyderabad. This was a question asked in the previous CAIIB examinations. NEFT, this is also working 24/7. For RTGS, the minimum amount that is to be sent is 2 lakh rupees. NEFT doesn't have a floor level or a ceiling limit, so it can be sent. Coming to NRI banking. Before NRI banking, we should know who is an NRI. Only after that we will be able to learn about NRI banking. So for any country with large population working abroad as expatriates, non-resident banking accounts become important. So for whom are these very important? The person who is staying outside India or working outside India. So we can define NRI as per section 6 of the Income Tax Act defines a non-resident Indian based on the number of days a person stays outside India. If an individual is in India for at least 182 days in the preceding financial year, or if an individual is in India for at least 365 days in the 4 financial years and at least 60 days in the preceding financial year, is treated as a resident. So, a person should be out of the country for more than 183 days in an year in the previous financial year. In only that case, he is considered a non-resident of India. India too needs to service the requirement of its people staying abroad for business or profession or any other purpose, or those who are settled abroad. As such, the individuals are classified into 3 categories. Now, the NRIs are classified into 3 categories. They are initially the NRI, non-resident Indian, second being person of Indian origin, and the third is overseas citizen of India. So, what is an NRI? NRI, there is no definition as per the FEMA Act. The Section 6 of the Income Tax Act defines an NRI based on the number of days of stay outside India. Indian citizens residing outside India for a combining total of at least 183 days in a financial year is considered as an NRI. Indian students are also treated as an NRI. Only the income that they have earned in India is taxable in India. So the income earned outside is not taxable in India, provided it is taxed in the nation where the NRI resides, only if there is taxation in that country. For example, if a person is residing in Dubai for more than 9 months in a year and he's earning there, and there is no taxation in Dubai, so he doesn't have to pay any. If there is taxation in that particular country, he will be paying the tax in that country. If not, he will not be. Who is a PIO? The person of Indian origin. An individual can be an PIO by birth or by descent. If he or she is a child, grandchild, or a great grandchild of a citizen of India. How is he a citizen of India? As per the Constitution of India or the Citizenship Act, or he belongs to the territory. So this conditions apply for a citizen of India. If he or she was a child, a grandchild, or a great grandchild of the citizen, or a spouse of foreign origin of the citizen of India. And on Jan 2015, the government of India withdrew the PIO, person of Indian origin card scheme, and it was merged with the OCI scheme, Overseas Citizen of India scheme. Now let's go into the OCI scheme, Overseas Citizen of India. It authorized a foreign citizen of India, Indian origin, to live and work in India for an indefinite period. This includes all those who were previously Indian citizens, as mentioned in the previous slide, or whose parent, grandparent, or great grandparent is or was an Indian citizen. In the case of PIO, we were saying that child, grandchild, or a great grandchild. Here, the words are the same, but in an opposite way. Whose parent, grandparent, or a great grandparent is or was an Indian citizen, or anyone who has married an Indian citizen or an existing overseas citizen of India for at least 2 continuous years, who all cannot be considered as an OCI. Anyone from Pakistan, Bangladesh, and anyone who has worked in any foreign military is not permitted to apply for the OCI cards. They are permitted for a multiple visit. The visas that are issued for them is for multiple visits to the country. There is no restriction for their visit to country. They can come over to India, they can stay in India, they can carry out their businesses in India if he or she is a OCI. OCIs are eligible for citizenship. They stay in India for more than 5 years continuously as an OCI, and he or she has applied for the citizenship. Rupee and foreign currency accounts. Now coming to the different type of accounts. Rupee and foreign currency accounts. So we are coming into the different type of accounts that are opened and operated by non-resident Indians or the overseas citizens of India. We will be continuing the class in the next day. For now, just a brief introduction. What are the type of accounts that are being operated by NRIs and OCIs? Accounts for NRIs are NRE account, that is a non-resident external rupee account. What is a NRO account? It's a non-resident ordinary rupee account. FCNR is a foreign currency non-resident account in banks. SNRR is a special non-resident rupee account. NRE and NRO account are mentioned in a rupee in Indian currency. FCNR is maintained in foreign currency. That's it for the day. The next class we will be continuing with the NRE accounts. If you do have any questions, please do update the questions in the comment section. Have a great day. Thank you. Do subscribe our channel. Do like, share and subscribe our channel. Brilliant Bankers. Jai Hind.